Hi guys, this screencast will give a quick explanation of the petty cash fund in the accounting environment and an example of how to solve a petty cash question. Petty cash is one of two forms of cash control, the other being a bank reconciliation. Petty cash is a label assigned to the small amount of cash kept on hand by a business to pay for minor expenditures. Operating the petty cash fund is a three-step process that involves establishing the fund, making payments from the fund, and replenishing the fund. It is important to note that individual payments from the cash fund do not require their own journal entry. One total entry is recorded when the fund is replenished. This typically occurs at the end of each month. Let's run through a quick example of the petty cash fund question and how to record the solution. On the 1st of March, Schmoedico establishes a petty cash fund in the amount of $600. On the 31st of March, the fund is replenished. Before replenishment, there were $236.50 remaining in the petty cash drawer and the following receipts: cleaning supplies of $220, staff snacks of $23, postage of $55, and miscellaneous expenses totaling $67.25. Prepare all journal entries and replenish the fund. The first step is to record the petty cash fund opening balance and deduct the cash remaining from the fund to determine the cash amount required to replenish the fund. In this case, $236.50 remaining from the original $600 fund requires $363.50 for replenishment. Next, the receipts for each expenditure are recorded and the total is determined. A likely occurrence when replenishing the fund is noticing that the cash required to replenish the fund does not equal the total amount of expenses receipted. What must be done is the cash required for replenishment is deducted from the total receipts to find the difference between the two amounts. If the difference is positive, then the amount is credited in the following journal entry. If the difference is negative, then it is debited. In this scenario, the difference is a positive $2, meaning that the total receipts recorded is $2 greater than the cash required to replenish the fund, so $2 is credited in the following journal entry. The first step of the journal entry is to debit the opening balance of the petty cash fund and credit cash. Secondly, each expense is debited and the total receipts is credited to cash. The difference between total receipts and cash required to replenish the fund is credited here, the $2 difference that was determined previously. This amount is credited as a short over account. All journal entries are now recorded and the fund is replenished. I hope you have found this screencast on petty cash informative. Thank you.